Hey, I wanted to do a little bit of a different video lesson today. Normally, I talk about specific individual stocks, but a lot of you guys seem to forget the overall market and how it influences things. And I think that in the coming few months, the overall market is going to be a big, big influencer on trading, on investing, and you need to keep it in the back of your mind. And so today, I'm going to present my reasoning for that and how it influences my current trading. Here is Carl Icahn. He's a great billionaire investor. Just nailed Netflix for the past few years, nailed Apple. He's had wins for decades. But his past two tweets, he says, I believe the market is extremely overheated, especially high yield bonds. If more respected investors had warned about the market in 2007, we might have avoided the crisis in 2008. So he's saying that, the US stock market and high yields, I mean, there are some very big warning signs, and he's trying to warn about it in tweets. This is his new Twitter account. It's really crazy. I mean, he's pretty open. He said sold the last of our Netflix today. And that dropped Netflix like 20 or 30 points. Another billionaire investor, Jim Rogers. He's the former partner of George Soros, and he's does not like U.S. stocks. He says this is the first time in recorded history that all the major world central banks are printing staggering amounts of money. Now the world has this huge artificial ocean of liquidity. Blah, blah, blah. Well, the people, this is a good quote. The people getting the money are having a wonderful time, but when it ends, it will be very nasty. And so he's talking about you know, I have to quote everything. He doesn't say anything bad. In the United States, we have had economic slowdowns every 4 to 7 years since the beginning of the republic. It's now been 6 or 7 years since our last stock market problem. We're overdue for another problem. The Fed might tell us we don't have to worry. That's balderdash. I don't even know what that means. But he says when this artificial sea of liquidity ends, we're going to pay a terrible price. Um, he's been saying this for a while. Understand that. So now he's using that this is 7 years in. And if you know about him, he also knows that he's not a great timer. So take what he says with a grain of salt. But he is a billionaire, and he's not wrong about the government and all the liquidity issues. Here is something more concerning. This is a Business Insider tweet just a little while ago, and it was these zeros prove past performance is no guarantee of future success. And so they look at the top mutual funds from 2011 and the top mutual funds the percentage of them that remain in the top quartile. So 2011, you have, let's say, 700 great funds. A year later, it's only 30 funds that are in the top quartile. Then four, then one, and then 0.28. And these other ones, large cap, mid cap, small cap, they all go to zero. Zero of the funds that were performing big in 2011 are now in the top quartile. So everything is changing. And CNBC, the Street.com, Bloomberg, they're not going to want to talk about this because they need their quote experts with their guessing games and calls about, oh, the US is going to do this company is going to do this. What I found, and this kind of makes me, weird and not so popular on Wall Street, but popular with my students because I make them millionaires, is that, past performance is indicative of future success if you actually have a specific strategy rather than trying to stock pick, trying to guess new trends and stuff like that. And the way that I found success, and people like Tim Grittani, who's at 2.7 million and he's up from 1,500 back in 2011, that same kind of number with Business Insider, where the mutual funds starting at 2011 and now zero of them are overperforming. 2011, Tim Grittani had 1,500 to his name. So how does he grow 1,500 to 2.7 million? And these professional money managers who make 10, 20, 30, 50, 100 million a year in fees. What are they doing wrong? What are we doing right? Tim Grittani it's not due to luck. It's not due to fraud. Oh, I have to mention, I'm sorry, I have to say this because there are only 15 spots left. Actually, maybe even 14. I just checked my email. We got another order. He has this early bird
Hey, Tim Grittani.
DVD special. You lock in $1,000 and you get to attend his one-time live upcoming webinar. I'm getting a lot of questions about it. We will email you when he is doing the one-time live webinar, but is only available to the first 250 people. Understand you are pre-ordering his DVD. It does not come out until August 1st. But trust me, I've seen it. It is staggeringly good and useful. It is 16 hours. So if you want to save $1,000 and get access to his one-time live trading webinar, you lock it in. There are 14 seats left. But aside from that, you'll see when you watch the DVD how he's done this. And it's not through specific stock picking, it's through following rules and trading the same patterns over and over and over again. And I know that, if it was a drinking game, like how many shots would you take every time I say study the rules, study the patterns? But it's true. All of my money comes from just a few patterns. Superman, same kind of thing. He's up 3.54 million on Profitly. He actually has nearly $1 million in unrealized profits right now on TRIL, which he's been buying since $8 a share, and it went to 30, and now it's at like 20-ish. He keeps having amazing success, and he's been doing this for nearly 2 decades now. Same thing with me. If you look at my profit chart, I keep having amazing success. But I want to focus on you. What does all of this mean? What does Carl Icahn's warnings, Jim Rogers' warnings, the fact that this no mutual fund can really last for more than 3 or 4 years and do really better than other people? What does Tim Grittani's continued success, Superman's continued success, and my continued success mean for you? That's what it all comes down to. I'm not, I don't manage money for other people. I'm not a talking head. I'm here to teach you, and I'm here to teach you tricks and the right mindset. Many of you guys have the wrong mindset, and I have to correct that. So people like William, I highlighted this earlier this week. He bought CBLI at $3.52 a share at after hours, and then he sold at 5.20 at 8 a.m. the next day, almost $1,700 before the first cup of coffee. And mind you, this is just a $3,500 investment turned into a $5,200 investment overnight, literally overnight. And, he basically said, awesome trade. He said, thanks, learn from the best. Billionaire buys low float equals a buy. So here's the chart of CBLI. And William was buying it. It was already up on news of the billionaire investor buying it. The stock was up from 280 to 350. So he was chasing it a little bit. But William has learned my rules. He is a fantastic, fantastic trading challenge student. He came down to trade with me live in Miami, and he has learned from successful patterns and successful traders. And this year, the single best pattern, the most reliable pattern, is when a billionaire buys a penny stock. So all of you should be looking to find news like that, not trying to predict the next stock where, oh, this is a good company, I think a billionaire might buy. No, wait for the news. Wait for the percent increase. A lot of you guys are like, how do I find these stocks? How did William know about the news? Well, again, it was in the chat room, which is awesome. More and more of you guys should go into my chat room. We have nearly 1,000 traders. We are the largest chat room for low price stocks. And so we have, a lot of breaking news like that. This was mentioned in the chat room after hours, but a lot of people didn't know to buy. I wish I had seen it because I would have bought. I frankly, just been overwhelmed lately. I missed it. But the past few times that I did buy a billionaire stock, oh, PTBI changed their ticker. Shoot. What is PTBI's new ticker? This is another billionaire stock that I did nail. PTBI is now Abiona Therapeutics. What is your ticker? ABEO. Okay, so ABEO. Oh, are you going to wipe out your past trading? No, good. So right here, it was up after hours from 3 to the 4s. And I was buying it, I want to say in the mid 3s or high 3s. Let me tell you exactly. This is important. PTBI. I had a few trades, but my first trade was the best. Oh my God, I traded a lot. And this was just a small profit. But I bought this at 360 and sold it at 425 the next day. I had no idea that it would go to $11, 2 days later. And VLTC, same kind of thing. I was buying it here in the twos, and I was selling it for a little profit in the mid twos, and I bought it in the threes. Or actually, I bought it in the high threes, and then I sold it in the low fours. I had no idea it was going to go to 21. Even now, it was at 6. So if I somehow had held it, but I was on the right track, and both PTBI and VLTC were mentioned in the chat room with breaking news. Same thing with CBLI. So when someone like William, and I love William, for his dedication. I don't even know where it went. Oh well, I have too many things open. Okay, here it is. So when William makes 50% overnight, that's not, mutual fund investing. That's not worrying about which trends are hot and trying to predict stocks. That's knowing a pattern, knowing that, this pattern will continue and it probably will keep going. He underestimated it. He made 50%. He sold CBLI too early. Even now, CBLI is at 531. So it's kind of funny when you're on the right path, you can really nail it. It went up to 720. So William, even though he made 1,700, could have made another $2 a share. So he could have made 3,700 on a $3,500 investment, all in the first 2 hours of the trading day the next day. I'm not saying to hold for that. When you have a 50% profit, you take it. But what I am saying is that there is so much opportunity with situations like this. Jim Rogers doesn't give a shit about trading stuff like this. If he's going to invest, or any other billionaire is going to invest in a penny stock, they don't care about making 20 or 50% in a day. It's not even worth their time. They're already billionaires. You are probably not a billionaire, okay? I would venture to guess that. So you should be taking advantage of patterns that can really increase your wealth, whether you put in 5% of your account or 10% or even 50% of your account into a play like this. And the key is not, being a slave to breaking news. Yes, maybe like after hours, look at, the biggest percent winners. Stay in the Tim Alerts chat room so you can just, poke your head in and see if there's anything moving. But look for predictable patterns like this. This is a predictable pattern right now. It's not always going to be this way. There will be other patterns. But when I profit on PTBI and VLTC and I miss CBLI, you start to say, hey, wait a minute. This is a good way to make money more times than not if you're early. I'm not saying chase it. When a stock goes up from 3 to 7, you're like, oh, this is going to go to 10. Not necessarily. Do not chase it. But if a stock is up from 3 to 340, that's fine. When I'm buying my PTBI, I'm not chasing it. I ended up making $4,000 on this one. Pathetic money. But I bought it the first day, and I said this in the alert, bought this new billionaire play. George Soros just bought over $1 million a share. Chance at running into the 4s or the 5s given VLTC, CLH, SYM. And I mentioned a few other billionaire plays. So, this was a good 18% profit for me. And this guy says, hell of a play. Where were you able to catch the news? And I said, I found it thanks to people chatting in the Tim Alerts chat room. So the chat room helps, but knowing a pattern helps even more. And this is the way to building a small account. Okay? It doesn't matter if the US market is overheated. It doesn't matter if there's a crash. Wait for plays like this. Back in 2000, when I made $800,000, it was very quick. But I was buying stocks as they broke out to new highs. 2000, later 2000, all of 2001, all of 2002, there were hardly any stocks breaking out to new highs because we were in a bear market. So I just didn't trade. And that's what you need to think. You need to think, okay, you don't need to trade every day. You think of yourself as a retired trader, and you're only going to come back out of retirement if there is a trade good enough. And this would be that kind of a trade. So it's a totally different mindset. And a lot of people have a lot of problems with that because you're like, okay, Tim, I want to trade. What do I invest in? Invest in yourself. Invest in your education so that you're prepared for patterns like these, so that you can use the right resources. If you're not in the Tim Alerts chat room, you're not going to have this news. If you don't know about the billionaires investing in penny stocks and how they can run for 1, 2, 3, 4 days, you're not going to invest and you're not going to buy. And maybe you'll hear about it later when it's at 5.5 or 6, and you're going to buy up here, and then you're down, and you're like, Tim, the strategy doesn't work. It doesn't work if you wait, and if you don't use the informational inefficiency. This is informational inefficiency right here, where the news is out, but because penny stocks no one gives a damn about, thank God, there is time for you to buy before everybody else hears it. If you're meticulous, if you have the right resources. So my chat room helps. Understanding these patterns help. That's it. That's what you need to do. You need to know about these stocks early, and you need to know about these patterns early, and you need to be prepared. And William went in with a plan. He bought it in the mid threes, and he sold it the very next morning right at 520. And he made 50% on his money. That is how you can grow a small account. Trades like that over and over again. That is what Superman, Tim Grittani, and I, and Michael Good, and Mark Crook, all of my top students have learned. When you make 20, 30, 40, 50%, you take the gains and then you get out. That is specific, meticulous penny stock trading. And that is why we're always going to do well. We're not going to be like a mutual fund where we're like, oh, well, I think, China's hot. We're not guessing. We're using specific patterns. And if the patterns don't exist, then we don't trade. That is why I'm so crazy, about you getting Tim Grittani's DVD. Not because I want to sell any DVDs, okay? I make hardly anything off this DVD. You can ask Tim Grittani. But I want you to get the knowledge in your head, and I want you to understand so that you're prepared. He has, I want to say, 8 main patterns that he goes over in this DVD, okay? And when those patterns appear, he is on. And he's made a lot of money. And he's learned to bet bigger when the patterns work. But when there's no patterns, he just doesn't trade. And that is fantastic, fantastic discipline that many of you guys don't have, because many of you guys don't know the patterns. You're trading every day. You're scalping. I hate to keep harping on PBMD, but it is true. I did not short it in the twos when everybody, my chat room, other chat rooms, other newsletters, everybody was telling me to short it right in here in the mid twos, because it was already up from 50 cents and they thought it was a gift when the stock was up 500%. And so many chat rooms and newsletters got decimated when they're shorting big at 250 and adding to their positions at 3 and 320 and 350 and 4 and getting squeezed all the way to 6 in the same day. And I have to stress this because nobody else will. People lost 20, 30, 40, 50, 70, 90, 100% of their money shorting this too soon. And even though it's come back down, even though they eventually would have been right, when you lose that much of your account, you are following a flawed methodology. Okay? And I understand it's not necessarily anybody's rules faults. When you're shorting this low, or as it turns out this low, you're breaking rules because you're not waiting for a red day. You're not waiting for the volume to fade. You're scalping. And many people in many chat rooms, especially in low price stocks, you get in the habit of playing the odds. The odds are is that PBMD would have kept, dropping. And if you shorted it at 250, 260, it probably would have gone to 2 or maybe even 150 the next day. 99 out of 100 stocks that are up 500% are going to drop like that. But I did not short it because I saw the volume and I saw how many people were short, and I did not like the risk. It did not fit a pattern that I've done very well with. So even if many people, would do this trade over again, right? And most of the time, they would short it at 260 and probably cover at 240 and make their 10 or 20 cents a share and be happy. I'm happiest not trading this kind of a play because it is not my pattern. And because of that discipline, I did not lose. And I warned people in my own chat room. I actually kind of wanted to buy it, but because I knew my subscribers were short, I don't want to trade against them. All I could do was give a do not short this warning, which I gave. And I saved my entire chat room and newsletter versus other people who don't want to mention it now, but they lost literally 1 month, 2 months, 1 year, 2 years, sometimes even 3 years of hard work on one play. Remember, no one play can, make you, okay? You're never going to turn $1,000 into $1 million on any one play. Get that out of your mind. But one play can break you if you allow it to. If you break the rules, if you bet too big, if you refuse to cut losses quickly, if you use leverage. So I don't want that to happen to you. I don't want you to end up like one of these mutual funds where if you're performing 1 year or the next few years, you have nothing. That is not the way to becoming a millionaire. The way to becoming a millionaire is having consistent gains when the opportunity is right. Right now, I don't have any positions, and that's fine because I will wait for the next billionaire play. I will wait for the next play that has earnings or contract win or a pump and dump to short. You know, NUGN is going to be a great short, but it keeps going up every day. There's more and more mailers being sent out every day. So I don't need to trade this again, but I will when the pattern is right. And that is what I want you to take into consideration. So when there's no trading, watch one of my DVDs. Watch my video lessons. Watch Tim Grittani's DVD in a few months. It'll be ready roughly a month from now. You know, we show the patterns that work. Stick to them. Please, 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 please do not try and reinvent the wheel. We have worked our butts off showing you patterns that work time and again. And it works for me, it works for Grittani, it works for thousands of other people. The problem is you lose your gains when you go away from those patterns. And you're like, Tim, your patterns are fine, but they come off so rarely. Like, I want to trade something else. If you trade random stocks, you will get random results. Okay, that I promise you. I don't want that for you. I want you to be consistent. I want you to grow your account exponentially because I love creating millionaires and I want more millionaire students. But the only way that that's going to happen is through discipline. Okay, I gave a live trading challenge webinar on DNRG on Friday. And yes, I underestimated it. It went from half a penny up to 30 cents a share. But when you had that squeeze right in here during my live webinar on Friday, we watched it and we watched the level 2. You trading challenge students, please rewatch that webinar. It's archived. That's the beauty of archives. And we saw the specific top at 33 cents and 31 cents on the failed bounce right in here. Let me get rid of after hours. So when you saw the top in the level 2 here at 33 and 31, a lot of people listened and they said, okay, Tim, I'll take my profits. And, I got students who were in at 15 or 20 cents and they're doubling their money. That's awesome. That's a speculative trade. Congrats. But many people, many people refuse to believe that this was the top. And now they're down, it's down to 11 cents a share. And I'm getting emails from people saying, Tim, what do I do now? I wish I had listened to your warnings. I'm screwed. Well, yeah, you are screwed. And you're always going to be screwed if you think about any one stock as meaningful. People who email me now who are bag holders, whether they're in from 20 cents or 15 and now it's 10 cents, they're emailing me, is it going to come back? What's it going to do? What do I do now? What you do now and what you should have done is learn the rules. Learn how to spot a top in level 2. Watch my Learn Level 2 DVD. No matter what I tell you, even if you're just following my stupid instructions, it's not going to make you a millionaire in the future because you need to learn to think for yourself. You need to be able to spot these warning signs yourself. Don't rely on me. Sometimes I miss a trade. I totally miss CBLI. But William, God bless him, he did not miss it. And look at this. I have to show you this because William's, I already made a video lesson on this, but I have to do it again because it's so important. You wives and you girlfriends and children out there, or husbands if your wife is trading. I gotta show you this. This is awesome. Williams. So I posted this with learn how to ride the bull market with me, and I posted William made 1,700, but this is his fiance, Megan, and I gotta give Megan props. This is William and Megan and their kids. Megan is William's fiance and says, thank you for being such a great teacher and mentor to so many, especially my fiance, William. He sure has been investing a lot of time trying to learn as much as possible, and I couldn't be more proud of him. And I said, his dedication is great. Glad it's paying off. That's what you should be doing, okay? All of you people saying, what should I invest in? Invest your time. Invest your time into yourself. And God willing, your family supports you and you have a great person like Megan supporting you. But that is what you should invest in. William did that trade all on his own. And that is what I want for each and every single one of you. The key to becoming a millionaire is to be self-sufficient and to recognize these patterns and recognize what news means on your own, without my help, without anybody's help. That's today's lesson, guys. What do you invest in? Invest in yourself. Invest time in your own knowledge base. Learn from traders who have made it, and we share specific patterns, not just sharing picks like all this bullshit on financial media. CNBC's ratings are at multi-decade lows, and it's because that does not work. Sharing stock tips does not work. That will never make you rich. Sharing patterns, sharing rules, sharing lessons, sharing experiences, that will make you rich, not just in finance terms, but in knowledge terms. And knowledge is the key to you really making it in this world. Thank you and have a great rest of the weekend.